And we wanted to see what was happening with that question. So I want us to check that question. In December 2023, question 2. So open last sitting, not even opening, it's the one on top. So I read, it says, H Limited, a public limited company whose functional currency is the Kenyan shillings, operates in the digital economy sector. The company has recently diversified its operations by acquiring shares in a foreign entity, S Limited. The functional currency of S Limited is the krona, which they denote by KR. The following statement of financial position were extracted from the financial records of the two companies as at 30th September 2023. So H Limited and S Limited, as you can see there. So H is the parent, which is reporting in Kenya shillings. S is the subsidiary, foreign subsidiary, which is reporting in crowns there. Additional information. On 1st October 2022, H Limited acquired an 80% controlling interest in S Limited for a cash consideration of Kenya shillings 300 million, when the retained earnings of S Limited stood at 540 million crowns. The fair value of the identifiable net assets of S Limited were crowns 2,700 million. The excess of their fair value over the carrying values was due to an increase in value of plant whose remaining economic useful life approximated 5 years. So you know that is revaluation. You just add retained earnings, you add retained earnings, share premium, and ordinary. Then what you get, you subtract from the value of the net assets, and the difference becomes the revaluation. Number 2, H Limited uses the fair value method to measure the non-controlling interest in subsidiaries. So that is full method of consolidation. There is no problem with that. The fair value of the non-controlling interest in S on 1st October amounted to crowns 900 million. On 1st October 2022, H Limited exported goods worth 180 million Kenya shillings on account to S. This transaction has been recorded by both entities. However, the accounts payable is still recorded at the rate of exchange that prevails at the end of the transaction, at the date of transaction in the financial statements of S. All these goods have been sold to third parties by S Limited, meaning there is no UPI. When goods has been sold to third parties, it means there is no unrealized profit. Unrealized profit only arises when goods have been sold internally. Goodwill arising on acquisition of S had not been impaired since acquisition. The following foreign exchange rates are relevant. So, fine. Crowns to Kenya shillings 1. So on 1st October, the exchange rate was 0.9. 30th September, 0.8. Average for the year was 0.75. Number 6, F Limited has not issued any ordinary shares since the date of acquisition. Fine. So these rates, when you are translating income and expenses, you use the average rate, just to recall that. So for P&L, use the average rate. For balance sheet, assets and liabilities, you use the closing rate. Closing rate is the rate on the date you are required to prepare the balance sheet. So like in this case, balance sheet date is 30th September 2023. So meaning our closing rate is 0.8. Then equity, you translate at the historical, when the subsidiary was acquired. If you check note 1, on 1st October 2022, H acquired. When you go to the rates, 1st October 2022, the exchange rate was 0.9. So for shares and reserves, you use the 0.9. For closing rates, assets and liabilities, you will use 0.8 closing rates. For income and expenses, you use the average, which is 0.75. Now, straight to required. So required, the value of goodwill arising on acquisition of S Limited in Kenya shillings. Then consolidated statement of financial position for H Limited as at 30th September 2023, 14 marks. So let's start with goodwill computation. What the standard requires, IS 21, first you calculate goodwill in foreign. Then you translate. During translation, we'll be checking whether there is a foreign exchange gain or a foreign exchange loss. So that is why we have to take it to foreign. So goodwill is always calculated in foreign, then translated to Kenya shillings, with the main aim of checking whether there is any variation in the exchange rates. So right there, goodwill. So this is Roman 1. Goodwill on acquisition. Goodwill on acquisition of S Limited. Goodwill on acquisition of S Limited. So here you will have the crores in millions. Then you will have here Kenya shillings. So we start with purchase consideration. Purchase consideration, check, we were given somewhere there. We were given in note number 1 that the cash consideration of 300 million. But you see the 300 million is in Kenya shillings. So take it to crowns so that we calculate, because we have the net assets kila kitu iko in crowns. So let's calculate it first in, we bring them back in crowns, then we'll translate. So the 300 is in Kenya shillings, 3 million is in Kenya shillings. So on 1st October, what was the exchange rate? 1st October, the exchange rate was 0.9. So you will say 3,000. Do we multiply or we divide to take it from Kenya shillings to these crowns? I want to convert it to crowns. The way they have arranged, crowns to Kenya shillings 1. Do we multiply or we divide? I want to take it to crowns. Do we divide or we multiply? If you check well. If you're not sure, you do this. They have paid crowns to 1 Kenya shillings. Then the arrangement, so like on 1st October, it is 0.9. So that one means, you see that it crowns to. So it means 0.9 crowns is equals to 1 Kenya shilling. That is the meaning. So what about, now I want to take this one here. What about 3,000? 3,000 is in Kenya shillings. So that one you will multiply to go to that currency. Because they say crowns to Kenya shillings. So it means 0.9 crowns is equals to 1 Kenya shilling. So multiply by 0.9. What do you get? So tuanzia hapo sharp tukisonga. What do you get? What do you get? 2,700, get it? 27. Then you add fair value of NCI. Fair value of NCI. They said in note number 2, check note 2, H Limited uses the fair value method to measure the non-controlling interest in subsidiaries. The fair value of the non-controlling interest in S on 1st October amounted to crowns 900. So that one has already been stated in crowns, so you don't have to translate. So this one here will give you 36. Then you less the fair value of net assets on the date of acquisition. So less net assets on the date of acquisition, which they stated in note 1. Check note 1. The fair value of the identified net assets of S were crowns 2,700. So they were crowns 2,700. So you subtract. And the difference will be goodwill. So goodwill, so this one will just be 900. Goodwill is 900. So now, finally, reporting, we are going to report in Kenya shillings. So after you have computed in crowns, is when you translate it to Kenya shillings. Goodwill is on the date of acquisition. So the rate on the date of acquisition was 0.9. So right there, 0.9. 0.9. In fact, in between here, you could have written for me rates. So 0.9. So take 900, divide by, to go to Kenya shillings, to take them to Kenya shillings, you divide. To get them in crowns is when you multiply. But now to get to Kenya shillings, you divide. So 900 divided by 0.9, will that one be 1,000? So that should be 1,000. All right. So you bring here 1,000. I hope everyone is okay with that. And there was no impairment. If there was impairment, we subtract. So now, I want us to translate. So that is the translated goodwill on the date of acquisition. So the date of acquisition in crores, it is 900. In the Kenya shillings is 1,000, which we are interested in. And this one was on the date of acquisition. But you see the books will be prepared at the end of the year. So you also need to translate goodwill at the reporting date. You know, what we all know is that goodwill is computed on acquisition. So this goodwill here was by the time the subsidiary was acquired. So what about today? So you'll come here and say, foreign, andika tu hivyo, you will understand what I want to bring in. Foreign exchange. Foreign exchange. So I don't know whether it will be a gain or loss. So just leave the one exchange, then we'll know what it is. Then we'll insert the word loss or gain. So now you leave it hanging there. Then this side. Then you say closing goodwill. Closing goodwill. So of course, hapa kutakuwa na kitu. So of course, closing goodwill will be 900. Closing goodwill is 900 because there is no impairment. So the closing goodwill is 900. But what was the closing rate? Because we are checking now at the end of the year. The closing rate in this question was 0.8. So this closing goodwill should be translated at 0.8. So what is 900 divided by 0.8? What do you get? So that will be the value at the date, at the balance sheet date, and that is what should go to the balance sheet. What do you get? $11. So you get 11.25. So kidogo tu. Yes, move again. Watu wa section 5 ndio walikuwa ni kama link yao inaingia kwa hii clouds. So when we acquired a subsidiary, goodwill was 900. When we are closing, goodwill is 11.25. So the increase in goodwill from 1,000 to 11.25 is a foreign exchange gain. So andika add the word gain, foreign exchange gain, in bracket BF. BF is the balancing figure. Balancing figure. So how much? 125. 125. Have it there. The increase. So that is how we determine foreign exchange gain. So down there, you allocate, you say allocate the foreign exchange gain, allocate the gain. So allocating the gain, holding company, NCI. Holding company will go with, they were having 80%. So they will take 80% of 125, 20% of 125. What are those two figures? What will each of them take? Thank you. So that is 100. And this one goes with 25. And that one was to give us how many marks? 6. Wait. Hapo ilikuwa nywe. So 6. How do they normally mark hiyo watamaka? Wanakuanga very mean, I know. They will mark this. These people, they will mark 1, 2, 3, 4, 5. 4, 5. I think it is any 3 at 2. 6 marks. You take what we do, nothing much. Any 3 at 2, you get the 6 marks. Perfect. So required next, they want us to prepare the consolidated statement of financial position. But now, there are some small issues which I've seen there. We can 650. The next 10 minutes we can utilize to find a time equal. I want us to do some small adjustments, which I've seen like payables. I'm seeing payables is having some small issues there. You need to make those adjustments. So have there working one. I saw the payables was having some issues. So I want us to read this note number 3. Let's read note 3. Note 3 says that on 1st of October 2022, H exported goods worth 180 Kenya shillings on account to S Limited. This transaction has been recorded by both entities. However, the accounts payable is still recorded at the rate of exchange that prevail on that date of transaction in the financial statements of S. You see now that is wrong. Those goods were bought on 1st October. 1st October was the beginning. Now we are reporting on 30th September 2023. They are still recording them on the rate which was prevailing in 2022. So the payables figure is not accurate. We have to adjust. Just check. We need to adjust our direct results. So we just need to translate. We need to translate. Ndio tuone pia kama kuna foreign exchange something coming in. So write for me there, working one. Working one. Translation. You can give it any name. Translation of trade payables. Trade payables. So here, We have them in let's have here in Kenya shillings. They sold the goods, good check the way they are saying, they sold the goods. Kwa nini hapo wanataka kuleta issues mingi? They are saying the goods were sold in Kenya shillings. Kenya shillings 180. So, but they are still recording at the foreign exchange rate. Foreign exchange rate by that time. So, how will that one help me? I don't know. You're not idea. Let's just do it the way it is, the way we think it should be. Then we maybe that's idea for Bell to help us ahead. So right here, they sold in Kenya shillings. Kenya shillings, rate, then crowns there. Because they were recording in crowns, and maybe it will help us ahead. Let's just do the way they are saying. So on 1st October 2022, when they were sold, the value purchases here, the value was 180. And on that date, the exchange rate was 0.9. So what is 180? When going to crowns, you multiply, you don't divide. 180 times 0.9, what do you get? What do you get when you multiply that? How will that help me? Thank you. 162. 162. Then on 30th, no, skip a line here. Skip one line for this. Foreign exchange. You know, when you fail to translate, there will always be foreign exchange gain or loss. So foreign exchange something, leave it like that. Then on 30th September 2023, closing, that is the balance carried down. Of course, nothing has happened. So this is 180. This is 180. So 180, at the end of the year, I would want you to translate 180 at 0.8. So can you multiply 180 times 0.8? What will you get? One 80 by 0.8, what do you get? 144 crowns. So the difference is the foreign exchange gain. That is a gain because you know this is a liability. Decrease in the value of a liability is always a gain. So foreign exchange gain, write in your books the balancing figure. A decrease in liability is a gain, which will reduce our payables. So 162 minus 144, how much is the gain? They held payables for long. So that is a foreign exchange gain of how much? The difference? 18. Now, so foreign exchange gain is 18. So that 18, at the end of the year, you will want to translate it. So translated gain on payables. translated gain on payables will be 18 divided by, now you bring it to Kenya shillings, you will divide by 0.8, the closing rates. So it will reduce our payables in the balance sheet because they held payables for long, mpaka value ikashuka to the subsidiaries. That is again, decrease in payables is again to them. So this gain will reduce our payables in the balance sheet. So to Kenya shillings, you will divide by 0.8. So what will you get when you divide? When you divide by 0.8, what do you get? 22.5. So you will remind me, I hope that will be the correct thing. In the balance sheet, you will consider the 180 as intergroup payables, which you will subtract, but also you will consider this gain to reduce the overall payables. That is perfect. I want us to check, maybe we can check the net assets. Net assets are some issues. Net assets. It is necessary. Yeah, it can help. How? Just trying to think with this examiner. But then this person did not give us the profit for the year. Fair value of net assets quite some. So that is that. So I want to delete that one there. I want to delete that one. I want us to check our net assets. They said the excess was revaluation, which people call fair value uplifts. So I want us to analyze the net assets to check whether we can get that fair value uplift, that revaluation of plant, which they were generally talking about. So right for me there, net assets. So working to net assets. Net assets. Net assets. Check note 1, they were saying on 1st October, H Limited acquired 80% controlling in S for consideration of 3,000 million, when the retained earnings stood at 540. The fair value of the identifiable net assets was 27. So that's the fair value. Can you check the book value? Check the book value of the identifiable net assets. So book value, you go for ordinary, share premium, retained earnings, like that. Then you will be able to know. So I can even bring them at once to malizane nazo. But doing that will really help me. So right here, ordinary share capital, ordinary share capital, share premium, retained earnings, retained earnings. Yeah, how is that way? We want to look for the value of this revaluation. So ordinary of S you will be able to see 1560. Of course, remember they are in crowns. So 1560. Share premium, 200. Then retained earnings. Retained earnings, you check on the date of acquisition. In note 1, retained earnings, they said it was 540. So can you add this? Then we compare with the one they have given us, 27. Difference will be the revaluation. Can you give me that figure? That is 2,300. Thank you. 2,300. Skip one line. Skip one line. Fair value. So this is the book value. This is the carrying amount. So this is the carrying amount. While the fair value of net assets, on the same date, they say 27. They said it is 27. Meaning that the difference, the increase between carrying amount and fair value, that decrease is what we call revaluation. Ama kwa tena the name revaluation, we get a fair value uplift. Tukwe tofauti na wengine. Fair value uplift. Balancing figure, take up a balancing figure. 23 to 27, it means revaluation was 400. Correct. Revaluation was 400. Was it being depreciated? Was it being depreciated? Yes. They said it had a remaining economic useful life for 5 years. Remaining economic useful life of 5 years. So depreciation is going to be 400 divided by 5. 400 divided by 5 is 80. That is what you have to appreciate. That is 80. Remember, all those figures are in crowns. So to take them to Kenya shillings, you'll have to translate. But should I start disturbing myself at this stage? Yes, I can. But whatever is when it is necessary. When it is necessary. I don't think right now that one will be much sensible. I don't think it will be of great concern. But if you wish to, if you want to take them to Kenya shillings right now, like what I would want is this revaluation. Revaluation, of course, this was on the date of acquisition. You can divide by 0.9. Where can I maybe if I need it, I will ask you. Then 80 is depreciation. Depreciation is an expense. Income and expenses you divide with the average. So average was 0.75. 0.75. So please just have them. In case I will require them, you give me in Kenya shillings. Have those two for yourself. I think I'm remaining with 3 workings. 3. I need to determine there is always foreign exchange difference on holding net assets. When you hold net assets, opening, ukiwa na shares, there is always the foreign exchange gain or loss on it. So I need to check the net assets at the beginning and net assets at the end. the difference should be reported as a foreign exchange gain or loss. So I need to check that. Then I calculate retained earnings, NCI. Then we can do presentation. So write for me there. Foreign exchange gain or loss. Foreign exchange gain or loss on net assets, on holding net assets. Foreign exchange gain or loss on holding net assets. That should be working 3. On holding the net assets. Yeah, that one will solve my problems. So working 3, exchange gain or loss on holding the net assets. When you hold net assets for long, of course, the rates keeps on changing. So you need to check whether there is any gain or loss on that. So you will translate from crowns. Let me just refill my pen, just 1 minute. There is support. Let me just refill the pen. refill my pen so we can proceed. So when you hold assets, net assets, the equity components, of course, you will expect them to be affected with the exchange rates. So you will have them here in crowns, then exchange rates, and we want to report them in Kenya shillings. I think ukitoka the workings presentation will be very fast. So opening net assets, opening net assets was 2,700, which we were given there in crowns. The exchange rate opening was 0.9. So can you bring that to Kenya shillings? Let's be faster. Niko na target here 7:30 to another workings. Then the remaining 20 minutes, presentation. Ndio tumalize hiyo swali. Siwezi kama kuacha hanging. So 27 divided by 0.9, what will you get? Chap chap. 27 by 0.9, should that be 3,000 in Kenya shillings? Yes, 3,000, thank you. Then I want you to reason out very fast. What is net assets? Net assets are the equity components, ordinary, share premium, retained earnings, that group of revaluation. So you find these other ones are constant, like ordinary and share premium, they are just constant. So if you want to, we want to compare opening with the closing. We want to compare opening net assets with the closing net assets. So what will lead to the increase in net assets is profit. Profit is the one which you will keep on topping up. So you come here and say, add post acquisition profit. So when you add post acquisition profit, you will comfortably get the closing net assets. So I want you to check here. I want you to check the profit. Profit is our concern. This subsidiary, if you are keen, it was acquired exactly at the beginning, September 2022, beginning of the year here. So what was the retained earnings on the date of acquisition? On what the examiner has given us? Check note 1. On the date of acquisition, the retained earnings were 540 here. Then check the closing balance sheet closing. Balance sheet, retained earnings we have been given as 1442. We have been given 1442. So the post-acquisition profit, which will increase the net assets, is the difference between this and this. But of course, I will adjust Tatawa depreciation, then maybe if there is any other thing. So post-acquisition profit will be 1442 minus 540, which is going to be, let me now take my calculator. That will be 1442 minus 540, giving you 902. 902, but there was depreciation within. So less depreciation. Depreciation, remember this is still in crowns. Depreciation was 80 in crowns, if I'm not wrong. Just check. Then there was fair value gain, which I can add. You add fair value gain on payables. When We held payables, there was a gain of 18. That one you add it to our profit there. The value of payables went down, so that is an income to us. So it goes to P&L. So that is 902 minus 80 plus 18. So the correct profit for the year is 840. So you'll come here and tell us 840. Have it there. Then that one being P&L, profit the P&L issue, you take it at average. Average is 0.75. But we don't have any option. So this is 1120. That's 1120. Correct. So to get foreign exchange again, you will add this one here, you translate it at closing, you check whether it will tally. If it doesn't tally, the difference is the gain or loss. As simple as that. So I want to delete this one here. Unajua hiyo inaharibia moods. But huko peke yako kila mood inaharibika. But si mbaya. That one is tukifanya swali lingine hata utaona ikiwa rahisi. So I want to delete this. For now, to know whether you gained or you lost, right here, foreign exchange. I don't know if it's going to be a gain or loss, so leave it there. Of course, it would be there. It will be here as the balancing figure. So get for me the closing. Get the closing. So closing net assets is 27 plus 840. So 27 plus 840, that is 3540. At the closing rate is 0.8. So you divide by 0.8. You get 44.25. What is the foreign exchange again? There is an increase because this is 41.20. So from 41.20 to 44.25, that increase is a gain. So that's a foreign exchange gain, BF, balancing figure. Of how much? Give me that difference. Yeah, that was my main worry. This was in here. Remember getting 305. Thank you. So foreign exchange again, 305. Imewahi ulizwa kwa mtihani. Wale Google student wanagopa hii kitu, waliuliza kwa mtihani. Hii kitu imeleta pekwe ngumu ni hiyo. Hata kuna ni post acquisition profit, but mostly one that difficult. So on net assets, holding net assets, we have a gain of 305. So you allocate the gain. So the gain, holding company, NCI. This was the only one thing which I thought would take my time. So holding company will take 80% of 305. This one will take 20 of 305. So that we have 305 by 80, 244. 305 minus the answer, 61. So, dear students, hata kama ni mbaya, at least you should know something. Ukiambiwa foreign exchange gain on the net assets, you know how to start. Utapata kuna mtu hajui kuanza. So you knowing even to post the first one, opening, that is a plus on your side. So, but tutafanya another question. Now I want us to calculate the group retained earnings and NCI so that when we go to presentation, we don't have any baggage. So I'm working for, right there, group retained earnings. Group retained earnings. And even I just want to do it here. So working for, I'm running this. Working for group retained earnings. So group working for group retained earnings. So group retained earnings, of course, you are reporting in Kenya shillings. Nothing much. You bring for parents. Parent is called H. You check the balance sheets. Check the retained earnings in the balance sheet of H. Because retained earnings is in the balance sheet. What do you get? What are you seeing not getting? You are seeing 59. You should be able to see 59. Then for S, you add post-acquisition profits, S limited. So for S, you only go for post-acquisition. Post-acquisition is here in Kenya shillings. So we don't have to struggle. That is 1120. I'd already adjusted for depreciation. There is no unrealized profit, and therefore there is nothing. So this is 7020, if I'm not wrong there. I hope I've added it. Well, the only problem is that is not right. 1120 nimechukua in full, while parent was not controlling 100%. I'm supposed to take 80% of the profit so that NCI will take 20. So 1120 by 80 is 896. I'm overambitious. 896 plus 59. This is 6796. Then our last working will be NCI's equity. Then we are done with workings. Ili tunaweka hapa ni waste time. Kitu muhimu ujue rates tukienda kwa presentation. So non-controlling interest, we can start. In Kenya shillings, you start with their fair value. Fair value on acquisition. So check the fair value of minority on acquisition. How much was it? Let me just engage the class. How much was it? How much was the fair value of NCI on the date of acquisition? Somebody can spot that? Haraka. Thank you. Yeah, but in crowns. So 900 crowns. But you see that was on the date of acquisition. So 900 divided by 0.9. On the date of acquisition, we are dividing by 0.9 to bring it to Kenya shillings. This one, I think, gave us 1,000. Then, that was on the date of acquisition. After that, they take post-acquisition, just this one here. Parent has taken 80, minority give them 20. So post-acquisition profits, give them 20. 20 times 1120. They will not have any problem. So that is 1120 by 20, 224. Then in this company, there has been foreign exchange gains on goodwill and also there is on the net assets. So minority has received foreign exchange gains twice, on goodwill and also here. So you top them up. So you add foreign exchange reserve, foreign exchange reserve. On goodwill they got how much? Then on net assets. Net assets tumefanya sahi nimeona wamepata 61. The share of the 305 nimeona 61. How about goodwill? How much did we allocate to MCI on goodwill? Foreign exchange. How much did they get? How much did we allocate to minority from foreign exchange on goodwill? That one I don't have. You have it. Brian, we gave them 25. So the total value of minority will be how much? You add that plus foreign exchange reserve on goodwill plus net assets of 61. Then we go to presentation. And let's have another question. So how much goes to NCI? How much goes to NCI? Thank you. NCI Abdallah, we take 1310. So indicate there 1310. Now, I want to go to presentation, which I know most students last semester in this question, they went direct to presentation. Tumeshinda tukifanya hapo, just waste of time as per the question. But I have to do it because what if in the next question you will be told to determine foreign exchange gain on the net assets. So you need to know how to go about it. But if it's not asked like this one, you're just wasting time doing easily. That's the truth. You go to presentation direct. If you talk goodwill, go to presentation. In foreign, what the examiner is always checking is whether the student is able to know the rates. Like here, we have been asked for the balance sheet. Balance sheet tutanyorosha na closing rates. Assets and liabilities, you will be taking the closing rate, which is 0.8. So that's what the examiner really wants to know. So don't waste your time with workings. Don't try to shine. The day for shining will come. Here, we want to pass fast. So let's see what these students have to do. So right there, the name, H group, consolidated statement of financial position as at 30th September 2023. September 2023. Of course, we are reporting in Kenya shillings, which are in millions. So be ready, we kick off. That presentation should be within the time frame. Thank you. We kick off. Non-current assets. So non-current assets, we have PPE, property, plant, and equipment. So this is 85 plus 3,000. Taking them to Kenya shillings, we divide. Actually, most questions, you will find them being just divided. So hapo pia ukikosea, wewe multiply, unapata 0. So we divide. You can just test kama uko sure the way we did. Crowns is equals to 1 Kenya shilling. What about this? So, but in most questions during translation, you'll find them in the financial is just division. So you divide by closing rate, which is 0.8. So this one you divide by 0.8. Then there was revaluation. Remember we had revaluation, which had already been depreciated, but now we can't forget about it. It was how much? How much was ours? It was 400, if I can recall. Recall the revaluation. It was 400 on the date of acquisition. So plus 400, but now reporting dates, you will bring it as, you divide by 0.8. Then the useful life was 5 years. Ama nitoe to depreciation. Depreciation was how much? Tumepata depreciation ya ngapi? How much was our depreciation? Ama, if you don't want to go to the depreciation, you can just take this one here, you multiply by 4/5. This one. It will solve your issue very fast. Then, yes, it was 80. Why I'm multiplying by 4/5? Useful life was 5 years, and we have only depreciated 1 year. Only one. So it means for the remaining useful life is 4 years. So you can either subtract depreciation direct, or you just multiply by 4/5. Because this is year 1, and we have only depreciated it for that 1 year. So it means the remaining is 4/5, whichever way. Give me the value of PPE. Someone? Use speed ndio tuangalie. Yes or bad? How much are we getting for PPE? Just bring that answer you are having. Time is not on our side. Ama watapia ni add, then we confirm, or you confirm. So I will start with this one, which is big. 400 divided by 0.8, that is 500, divided by 5 times 4. But Abdallah Malipea answer, 12,650. Can somebody confirm, please? Can someone confirm 12,650? Just one person is enough to confirm his figure. Karen has confirmed, yes, we over. Thank you. Next, goodwill. So goodwill we computed. How much was our goodwill? It was the first required. How much was the value of goodwill? We only have 10 minutes, and I can't leave that question hanging whatsoever. I can't connect in the next class, so we have to. So how much was goodwill? You bring them very fast. Goodwill was 1,000. So goodwill we got 1. Then we have other intangible assets. So intangibles, we have intangibles. So intangibles, we have 16 plus 510. 510 you divide by 0.8. Balance sheet is 0.8. What do you get? 510 divided by 0.8 plus 1600. Napata ngapi? Goodwill. Abdallah is saying goodwill was 1125. You know, I can't recall. This was the first required. Okay. Goodwill was 1125. Change it. Goodwill, I'm being told, was 1125. Thank you. How about this one? 510 divided by 0.8 plus 16. How much are you guessing? So itabidi nishike calculator yangu. 510 divided by 0.8 plus 16. I'm getting 22, 37. 22, 37.5. Give me the value of non-current assets total. What is the total value for non-current assets? Total for non-current. Kwa nini mko slow hivyo? Si kawaida yenu, mko very slow today. I don't know why. What could be the issue? Ama nikiongea inafika huko kwenyu after 5 minutes. So that is 16,012.5. Current assets, let's go to current assets. Inventory. Inventory, there was no issue at all. There was no unrealized profits. So just take 25 plus 1960 divided by 0.8. How I wish you can be giving me these answers promptly. Ndio tumalize. How much will that be? The best way is to start with the division one. This divided by this plus this one. It will keep you very fast. Remember, 49.50. 49.50. Then we go to receivables. Receivables, 2,300 plus 1,320 divided by 0.8. Ile mambo ya 180. The issue of 180 ilienda aje? Hiyo ya intergroup. Check note 3. Check additional information number 3. H Limited exported goods worth 180 on account to S. This transaction has been recorded by both entities. However, the payable is still recorded at their rate. Yeah, so you remove intergroup debts. So they have recorded 180. That is intergroup debts. You remove it from receivable and also payable, you will remove it. How much? So start with this plus this minus 180. What will you get? What will you get? $37, Rioba, 37.70. Then cash will be 1,650 plus 640, 0.8. How much? How much will you get for the cash? So we are done with the assets. Somebody? Abdallah, the issue was exchange rate. Where? On receivables. No, 180 was in Kenya shillings. Rioba? It was Kenya shillings. This 180. It was already in Kenya shillings. So we don't have to translate. Abdallah, that is. It was in Kenya shillings. Someone with the cash to ndio tufunge assets. Cash comes to how much? 2450. So somebody to give me the total value, 2450, the total value of assets. So total assets will be how much? The money is as easy as that. You mean deducting 180 from receivables. Abdallah, allow me to tukimaliza wote tumalize, then I unmute you uniambie hiyo 180. Mimi tusonge tu tumalize tuone. Labda nakosa kubalance juu hiyo tunasema, lakini I think we are in the right direction. Sawa, thank you. So total assets, who has the value for total assets? We have only 3 minutes, and most probably I will eat your maximum 5 minutes, depending with the rate at which you are giving me the answers. So total assets will be how much? Total assets, just adding from 1601 all the way to this. Remember, it can't be 20. Another for 27. 16 plus 4 is 20 plus, yeah, it can be that 27, sure. 27, oh, I thought that's okay. 27, 182.5. 182.5. Thank you. Let's go to equity and liabilities. Equity and liabilities. So equity and liabilities, ordinary share capital, parent only. Share premium, parent only. There we go. So ordinary share capital, parent only is 5,000. Share premium, parent only. Parent only was 2,000. Then exchange reserve. Exchange reserve. So on exchange reserve, okay, I hope utanipea haraka. On goodwill, minority, you remember minority we gave them, I don't know they got how much. Parent got something. Then also on the net assets, remember we had 2 reserves here. On goodwill, we shared to them, the ones we were allocating. So how much did parent get on the allocation of reserve on goodwill, the foreign exchange gain? How much did we allocate to the parent? It is an equity component. Exchange reserve is equity. So how much did the parent get? 100, thank you. What about on the net assets? On net assets, was it 61 ilikuwa minority? Parent got how much on the exchange? 244, yeah, something like that. 244. So that is 344. Retained earnings. I don't know which working we have done. Somewhere there. There's a working we did. I don't know if it was which working. How much have we gotten? For retained earnings, the one we just done shortly here. Retained earnings came to how much? 67.96, Karen. 67.96. How about NCI? So that we finish equity. NCI, we got how much? NCI, minority, 1310. Figures from the start. Give me the total equity. We are finishing. 8 should not get us here by any chance. People start working at 8. Already kuna watu wako kwa ofisi. So we should not waste people's time here. How much is the total equity? Total equity, someone with a figure? Abdallah, 15,450. 15,450. Thank you. Non-current liabilities. 10% loan stock. 10% loan stock. So loan stock is 1300 plus 1360. That one you will divide by 0.8. So you start by the division, then you add 13 to the Songa bill. What will you get for the loan stock? Someone's getting 3,000. Thank you. 3,000. Deferred tax, D-tax will be 650 plus 1268 divided by 0.8. What do you get? Hiyo imeenda hiyo. Leo tumemaliza. 1268 divided by 0.8 plus 650. How much do you get? $22.35. Current liabilities, as we finish, we have payables. Payables, 38 plus 1160. Payables is 38 plus 1160, 0.8 minus the 180. Ile ya receivables, the one you're saying, minus 180. Then there is something I can't remember. In payables, there was a gain. When you gain on holding payables, you need to reduce. So I remember there was a gain of was it 18? So you divide by 0.8. That one, in my thinking, that is the right thing. When you hold payables, then you gain, the gain should reduce the payables. How much? $11.60 divided by 0.8. Maybe minus. How much will that be? Thank you, Tullian. So then we are done. Karen, 1547.5. We just pick the one which has come. Current tax. Current tax. 900 plus 440, 0.8. How much? How much? How much? How much for the current tax? Hilo para working tumefanya hapo ni kuumiza tu wanafunzi bure. Na mwanafunzi mwenye anataka kuumizwa pia. Sabdala 1450. So can you check for me total equity and liabilities, whether it is balancing with the total assets? So from 15,450, can you add? For balance, we have to react. But I think we have done it the right way. So Abdallah, 27,182.5. Yeah, that is in order with this one here. 27,182.5. So now in this question, students were required to get 7 correct entries. So before I mark for you, Abdallah, ama uliona makosa kwenye I've already enabled you to talk. Ama ulishaona where what you are asking, or you can still bring it up. Abdallah, there's a question you had on receivables. Oh, so that is okay. So here, students were required to have 7 ticks. So the 7, what they were testing is knowing the exchange rates. So any student who knew the 0.8 will get this one here. So this was 1, 2. This one here, 1, 2, 3, 4. Hiyo variables ilikuwa na issue. So twende kwa tax. So 1, 2, 3, 4, 5. Then here, 5, 6, 6, 7, 8. I can assure you for a fact, any student who did not know anything, what he or she knew is just that balance sheet we divide by the closing rate. And I'm going to use swali yote. So 87 times 2. That is 14. So, kupenda hiyo kitu si gumu. Just knowing the exchange rate. Allow me to leave you with that question just seconds. Niangalie swali. You will check for me. You will check for me. April 2022. April 2022. Question 1. April 2022, question 1. Ukipata time, relax with it. We shall do it tomorrow. So Walter and the rest, unless you're, I don't know what JTL did with the Wi-Fi connection, the other side. If they don't, still tutakuwa online, but I'm sharing the recording right now for those who their networks were having issues. So have a nice day. Revise this before you go to this one here. So God willing, we do this one tomorrow, tumalize, then tuanze cash flow over the weekend. Have a blessed day.